Today we're talking about the advantages of FHA loans and if it's right for you. So let's get into it. Hi my friends, it's Lee Brickey with the Brickey team at Keller Williams Reserve, and welcome to another edition of Real Estate Tips and Tours. If this is the first time you've been to my site, please don't forget to slap that subscribe button, ring that notification bell so you don't miss any of our videos. We put up a new video every Friday, and on Tuesday we have our Tuesday Real Estate Tips for South Florida. So everyone has an opinion these days on if you should buy a home and what type of mortgage you should use. So the purpose of this video today is so that you can make an educated decision if an FHA mortgage is right for you. And if you watch to the end of this video, I'm going to go over some new enhancements that FHA has just added so that more people can get qualified for an FHA mortgage and get into a new home. So let's get started with a story of a few of my clients that have bought FHA about 8 to 10 months ago, and right now are in the process of refinancing their homes into conventional loans because they have 20% equity in their home now after only 8 to 10 months. These people are on their way of building wealth, and they did it through an FHA mortgage. Now you're going to find that everyone has an opinion about FHA mortgages. Many real estate agents aren't willing to take an FHA mortgage right now because of the requirements that FHA puts on that buyer. So it's making FHA a little bit harder to get accepted, but it's still a viable option for many people. The reason that FHA tends to be a little harder to get accepted in this market is because the appraisals on FHA are a little bit stricter. Also, if an FHA buyer puts an offer in and it's accepted by the seller and an appraisal goes through, that appraisal sticks to that property for 6 months, unlike a conventional offer where they could actually sell the house to another buyer for more money. So once they take an FHA deal and that appraisal comes in, they can't take another FHA deal for more money. With that said, if a buyer wants to pay more than appraisal, they are able to. FHA just will not finance more than the appraisal. So they're going to have to come out of that pocket with the additional money to close on that property. Many sellers are not aware of this though, so they turn down FHA offers. So for an example, if the sale price, so for example, if the contract price was $350,000 and the appraisal came in at $345,000, there'd be a $5,000 gap there. If the seller's not willing to come down to that $345,000, the buyer can come up to the $350,000. So what they would do is add an additional $5,000 to their down payment. This is the same for a conventional loan. It works exactly the same way. The problem that a lot of sellers and real estate agents have is that FHA has an addendum that's attached to the contract, and it states that the sale price must match the contract price. The reason that many sellers and real estate agents are not willing to take the FHA because in the FHA addendum that's attached to the contract, it says that the sale price must match the appraisal. But that doesn't mean that the buyer can't come up and pay more than appraisal. Another myth about FHA loans is they're only for first-time buyers, and this is absolutely not true. You just can't have more than one FHA loan, and if you have an FHA loan, you must occupy the property. So this means that you can't have an FHA loan for the property you're living in and have an additional property that you have an FHA loan on. So it doesn't work for, say, a rental property and your primary residence. Another myth about FHA loans is that FHA loans are only for people with bad credit. That's not true either. FHA loans just are a little easier to get qualified for, especially if you have a high debt-to-income ratio, and they also offer a 3.5% down payment instead of a 5% down payment like you would get with a conventional loan. Now, conventional does have a loan that's 3% down, but there's lots of qualifications in that, and one of them is you can only make a certain amount of money. Where FHA doesn't have those types of qualifications and is much easier to get qualified for. Another advantage of FHA loans is, though, that it does help people with lower credit scores get qualified to buy a house. As a matter of fact, FHA at 3.5% down, you can buy a home with a 580 credit score. If your credit score is below 580, FHA will let you go all the way down to 500, but you need to put 10% down. But a huge advantage to FHA loans is that if you're in the 600s, you get a really, really good rate, much lower than you would with a conventional loan. As a matter of fact, if you're a 680 credit score, you're going to get the very best rate and you're going to get the very lowest closing cost that's available with FHA. And going back to the debt to income ratio, FHA lets you go up to about 57%, where a conventional is in the mid 40s. So it makes it much more difficult with someone who has a high debt ratio to get qualified for a home that they would like to buy. The next advantage of FHA is that the mortgage insurance is much lower. So if you put less than 20% down on a home, you're going to have what's called mortgage insurance. With conventional, it's much higher than FHA because FHA has a fixed mortgage insurance, where conventional is tied to credit and to the amount of money that you're putting down on the house. Meaning the less money you put down and the lower your credit score is, the higher your mortgage insurance will be in a conventional loan, where FHA again is a fixed rate. Now, FHA does have a cap on how much home you can buy, but that's determined on what county you live in. For example, Palm Beach County, you can buy much more home because the home prices are much higher than you can somewhere like St. Lucie County, where the home prices are 50% less than Palm Beach County. The good news about that is, though, is that in these markets where home prices are rising significantly, every year FHA puts out new guidelines to match the market prices. Therefore, it's really important for you to speak with the lender right away when you're looking to buy a home. This way, the lender can walk you through the different types of mortgages and how much home each mortgage will allow you to buy. I've seen this happen many times where a buyer starts looking for homes first before talking to a lender, and they get their heart set on a certain size home and they find out that they don't qualify for enough to purchase that home. So it's always a good idea to get started with a lender early in the process so that they can walk you through all of the requirements and can give you an idea of how much that you can purchase. So I promised to tell you how you can get qualified for an FHA mortgage at the beginning of this video. This is another advantage of FHA for a person out there who maybe doesn't have enough credit. They have good credit, but it's not enough credit. FHA now allows you to show utility bills, that you're making payments on time to help with your credit, like your phone bill, your electric bill. And just recently, FHA started allowing you to show rent payments to establish credit. This is a really great option for people right now who want to get in a home but just weren't showing enough credit. And just recently, my lender, Brent Starts with United Lending, has a new mortgage that will actually pay your down payment of 3.5%. So if you're short on cash for closing costs and down payment, this mortgage is a great mortgage for that. Matter of fact, we just used it for the first time and we're closing on the client next week. It's a little bit higher rate and a little bit higher payment, but with rental prices the way they are right now, it is much easier and much less expensive still to use this mortgage than it would be to go rent a home, because all you're having to cover is your closing costs, which is about the same 3%, 3.5% on the contract price of the home you're buying. But If you're renting a home anywhere in Palm Beach County or St. Lucie County or Martin County, you're looking at anywhere between $2,500 to $3,500 for an average house. And you're gonna have to put first, last, and security down. And the other problem you're gonna deal with is they want 700 credit scores because there's basically nothing out there to rent. So landlords can get exactly the type of tenant they're looking for. So my suggestion at the end of this is, if you're thinking about buying a home, take a look at an FHA mortgage. If your credit's a little weak, or if your DTI is a little high, or if you don't have all of the down payment and closing costs, it's a great option for you because you can get into the market, buy a home, and start creating wealth like many, many others have over the last 12 months. Like I said, many of my clients bought FHA last year and now are refinancing because they have 20% down. And one of my clients is actually buying an investment property, refinancing her house, pulling the money out and buying an investment property with it. So that's all I have for you today. If you like this video, don't forget to give me a thumbs up. And if you have any questions or comments, please leave them in the comment section. I love to hear from all of you. And as always, I'll leave my website in the information section below so that you can search homes anywhere in South Florida and see exactly what real estate agents see, so you know if the home is contingent or it's active. So you're not looking at homes that are no longer on the market. And again, if this is the first time you've been to my site, please don't forget to slap that subscribe button and ring that notification bell so you don't miss any of our real estate tips and tours, and you can see our next video right there. Be kind to each other, and I'll see you next week. It says that the sale price must match. It says that the sale price much